There's a couple of things I think that are worth looking at now that we have all the exit polling and the results. The Democrats' strategy of helping to promote these extremist MAGA candidates in the primaries turned out to be a huge winning strategy because every single one that they helped put up against a Democrat, the Democrats won. But number two, so what that shows is the extreme right cannot field a winning candidate. But on the other side, all of these extreme left-leaning Democrats also did not do very well either. And so you're back to, David, what you said, which is we have been saying for a while, the winning strategy is that messy middle. It's the moderate person that kind of like tacks to the center. And this is what you see everywhere around the country, all of the ballot initiatives. Every time you had an extremist ballot initiative, whether it was a complete ban on abortion in a red state, or whether it was a tax the rich policy in a blue state, they failed. And so I think the message that you have to take away is the extreme left doesn't work. The extreme right doesn't work, right? If you look at, for example, like Kathy Hochul almost lost in New York State because of who? Because of like AOC and all of that extremist progressive rank and file. He is a winning candidate. And the scale of Reagan, if the Democrats also don't figure out how to clean up their act. Because the other message that's so interesting that I took away is the legislative agenda that works is actually what Biden has always believed. The problem is that Biden seems to get distracted or confused or hijacked by the left wing of his party. And they introduce all these unbelievably crazy iterations of progressive policy that just are not popular, even in blue states. Just look at the number of bills that failed. So he also has to fix what he's doing, by the way, because if he doesn't
things
clean up,
that could fail, a U.S. judge in Texas, I'm not sure, you can tell me if this is legit or not.
No, they stayed. But we should talk about that in the context of the economy, actually. This happens in the public markets a lot as well. So like when you see heavily shorted names, or when you know that certain hedge funds are on the brink, other hedge funds will go in and essentially force a margin call and a stop out, because then it's what causes all of these runs. And if you look actually inside of GameStop, the reason why you got all this gamification in the GameStop equity and a bunch of these other names was in part because of this dynamic. Folks that are highly levered, folks that don't have the right matching of risk. And what happens is they're solvent but illiquid. And then if you run the instrument into the ground, they both become insolvent and illiquid all at the same time, and the whole thing explodes. So, Brian, the question is, now that we know what happened, which is all of these crazy inter-party related transactions and, all of this stuff seems very illegal. There was a bankruptcy filing today, and up until today, it seemed like this issue was really about FTX International and Alameda, and it didn't touch FTX US, which for a long time tried to position itself as, well run and regulated as Coinbase. To be, they tried to say that. But now, if you look inside the Wall Street Journal, all the articles say that this is actually FTX Group. So the whole thing seems to be imperiled. Can you just help us explain that? Because now that's a lot of US people that were following the rules, thinking that this thing was matched one-to-one, that may be also affected. Found on there was an article that appeared that said that the head of compliance at FTX was also the head of compliance at a poker site called Ultimate Bet, which in the 2010s did this exact thing, apparently. Some version of this where they went in and they looked at hole cards of poker players, and then a few employees inside the business would basically play against these folks, knowing what the hole cards were, ran this cheat, stole millions of dollars. Somehow that person found a way to be head of compliance at FTX 10 years later. Which is incredible. But back to this question. So now what happens now is you have the international business and the US business and Alameda Research all rolled up into this one frozen entity, right? With now regulators having to. So do you know what happens in a process like this? Like, is it that the DOJ and the SEC get priority, or is there some international monetary, like who unwinds all of this? How do people get their money back, if at all? Where he was asked whether this was Lehman or Enron, And he said, it seems more like an Enron than it is a Lehman. And Brian, I'm just curious how you think about it. Like, is this sort of a fraud perpetuated by a group of executives to essentially take advantage of a situation? Or do you think that this is more like a Lehman situation, which is a well-run business, I guess, that just, got caught in a liquidity trap?
I think my guess is it's a little more like Enron in the sense that, yes, they were over levered and that kind of thing, but the minute that they moved customer funds in some way, shape, or form to backstop the hedge fund, that was, in my mind, fraud. And, that's more like Enron.
Do you think now that we have to open the gates on regulation, like the whole point of crypto in some ways was, trust nobody. And, decentralization is the key. But here, what we see is a lot of people were tricked into trusting FTX and having their deposits there. And it was a centralized exchange, which caused all these problems. So it's like, it almost violates the principles of what the whole product market fit was supposed to be. So what should sort of the observer expect? And what do you expect as a business in terms of how governments now react to all of this? Hold on. Let me just tweak your question.
Sure, build on it.
Because we should switch to SBF as well and just talk about the person. But to me, it seems the whole issue, if you come back, like what is the first string that you pulled that unraveled the sweater? Was the fact that these tokens were created out of thin air. They had no meaningful value. Somebody prescribed a value, and all of a sudden, everybody else in the economy all of a sudden said, yeah, I'll take that as collateral. Look, you cannot do that in the regular world. I can't call JP Morgan and say, I've invented this thing. It's called a share in XYZ, and I'd like you to margin loan, give me a loan against it. So, Brian, explain, like there is a ton of these tokens that have been engineered. Right? And there's been a ton of these tokens that have been sold. So what should people do that own these things thinking that there was going to be some safety or value or, like how do you think about all of these tokens that could be as basically as fragile and shitty and worthless as FTT? I'll tell you an even more explicit signal. He pitched us in that $17 billion round, and I did a Zoom with him. And after the Zoom, I'm like, this doesn't make much sense, but I'll have my team do some work. We did some work and we sent him a 2-page deck. And we said, here are our recommendations for taking the next step. One was the formation of a board. The second was the creation of dual class stock. The third was some reps and warranties around affiliated transactions and related party transactions. And the person that worked there called us back and literally, I'm not kidding you, said, go fuck yourself. Was quote unquote the response to us. We're like, okay. So that was the easy decision, but
message received.
Message received. But I still thought, okay, I'll just put that in the bucket of these guys are unbelievably arrogant and smug. But Brian, I thought what you thought, which is maybe it's because they've created some money-making machine in the Bahamas. And so they have that level of confidence. But then to see this thing to the extent of which is now, we're only scratching the surface, guys. We're going to find out stuff every day.